What's going on, everyone? And happy Friday. This is Jordan with Conquer the Markets. If you're new here, welcome. And if you're not, welcome back. We got an awesome session ahead. I hope you're ready. If you need to grab some coffee, some espresso, some tea, hurry up and get to it. We're about to go ahead and just make sure that people walk away from this session learning a bunch of things. Make sure you do go ahead and watch it to the end. If you're ready, now we're ready to get going. Let's go ahead and let's start off with looking at this chart. We got two lines drawn on this chart. Some people might say, what is this nonsense? Why are you just ignoring the all-time high you have here on Bitcoin occurring November 2021? Now, there are some people who do believe that April was indeed structurally the cycle top, that Bitcoin hodlers more or less willed this new all-time high. But you could see, regardless, if you ignore this area, and don't ignore it, we're going to come back to that in 1 second. I'm going to show you how and why that is so relevant. But I want you to see this one touch over here. And then you could see before breaking, it was resistance again. And then support, support, resistance, resistance. And then two more touches of resistance. Certainly, it is a trend line that is in play. And it is just two lines on a chart. But lines are essential for managing risk, to being able to go ahead and assess when you have resistance overhead, when you're into support, good times to take profit. If you are able to manage risk well, lines is all you need. Now, some people think that if we break out over here, we could be doing some Bitcoin things and be headed towards a target of 50,000. Some people even think 60,000 resistance. You can see it over here, this area of resistance. That was then briefly support before falling, confirmed into resistance. 60,000 programmed in. And then we also have a lot of people that think new all-time highs prior to the halving is priced in. Let's go ahead and look at all of that. You are aware of this chart. You're looking here at every 210,000 blocks. You're looking at the halving of the miner's reward. And you are seeing that prior, in the past two cycles, prior to that halving event, you saw that price did, after making an all-time high and then putting in a low. So far, we have an all-time high. So far, we have that cycle low. When we talk about cycles, we're talking about the period between each halving, every 210,000 blocks. And it's very clear from this chart that in the past, before the halving, price has kicked back up and tagged the 0.786 retracement fib. Again, before the halving, this is roughly about 3 months before the halving. This is well before the halving. We're talking June, while the halving was in May. So about 9-10 months before the halving. And a lot of people think that that's programmed in, that we're going to be taking a look at $50,000. And a lot of people are looking at this chart. And you're seeing this chart. This is the halving. This is the current cycle we're in. You could see Bitcoin here in white. I'm highlighting over here in white. And you could see that this is the approximation of the next halving event coming off. And it's very clear that we're following a similar trajectory where price comes up, price then comes down. And then thus far, before the halving, is kicking up again before it starts that accumulation zone and into the next halving. And that could happen again. There's a lot of similarities, and it's very clear, especially now after you have all this year's worth of data, where people before kind of brushed off any type of 4-year cycle behavior and now are really embracing it. But there's also a lot of differences that I see on this chart. One difference potentially could be that whether you're talking in this area over here, whether you're talking in this area over here, or both of those did not include a recession. Now, this was one of the shortest recessions on history, right? This was the lockdowns, the global lockdowns. And that was a massive easing by the Federal Reserve and central banks worldwide. But that is an anomaly. The globe was locked down, and it was the shortest recession on history. So you could say that there was no recession here, there's no recession here, and there could be no recession here. It's possible, but things are really pointing to the potential possibility of not only a slowdown but also a recession. And we've seen the language from the central banksters, from the Federal Reserve, pivot from there will be a soft landing to now, well, it's just as likely we hit a slowdown or a recession, and there could be something different this time. We want to make sure that we're prepared for it. We're doing a good job preparing for it, and we will in the future. So if you're not yet subscribed, go ahead and make sure that you do subscribe. This is different. What do I mean by that's different? Well, if I look at the all-time high, and if I look at the all-time high, and if I look at the all-time high, that's very clearly diminishing returns. Anyone should be able to look at this chart and say, not only are we're seeing diminishing returns, but I could say that this area here was different also, because we weren't seeing diminishing returns would have looked like this maybe, right? But we saw price during this current cycle that we're in outpacing the previous cycle. Why might that have been? They just flooded the system with money. There was an excess of liquidity everywhere, and a lot of it went into Bitcoin. That was different. And then it was right around this area, right over here, right around the beginning, the first quarter of 2021, when actually inflation began getting out of control. Price came back down. And this is different too, this area over here. What's different about this? Well, the past cycles, they ended with this blow off top, blow off top. This one didn't. This one was suppressed. Well, why was it suppressed? Well, there's the thought again that this was the structural top and that really there was not too much new Bitcoin being bought, but that because of the hodlers holding on to their Bitcoin, price was almost willed up. But there was also other things that were happening. There were things like Scammy Sam, FTX, selling Bitcoin they didn't have. Not only is FTX, but other exchanges as well, suppressing the price of Bitcoin. Now, we don't know what's going to happen over here. You can't just bet the farm that the same type of behavior is going to happen, because these were all anomalies. This wasn't an anomaly. This wasn't an anomaly. This wasn't an anomaly. We don't know what's going to be happening over here. We have to make sure that we have as many advantages as possible to help us understand what's happening, to have the awareness around us, and then to continue forward. Now, some people are like, well, what kind of TA is this? Here's the thing. I taught myself TA, honestly. I'm self-taught. Everything I've learned in the markets, I mean, I work with a great team. And truly why I started out when I first went live on YouTube, late 2019, I really felt that I was doing my best to build up all those around me. It's come full circle now, and I've hit that goal. That goal was to build up all those around me, so it becomes this massive feedback loop where we keep iron sharpens iron and getting it better. The team that I have built around myself has made me significantly better, and that just continues. Some people are wondering, well, what about this line? You can't just ignore it. There's a trend line here, so if you're connecting 2 points, it should look something like that. And if I showed you more than 2 lines to begin, you might get lost. So I only have 2 lines over here. And by the way, in looking at these 2 lines, you could say that price is being suppressed, and that likely, if this breaks out, that's why a lot of people are looking in the next couple of months that we could potentially be looking at $50,000. Now, going forward past a couple of months. So those that have, like, let's call it the bullish programmed case for Bitcoin, that believe that we're going to be tagging this area, they're kind of on a clock. Like those that I know, that I know and respect and admire, those who believe that, we're either hitting a new all-time high or that we're hitting 50K or 60K, it's programmed in. They believe that the clock is running down, and that has to happen over the next couple of months. So if we see a breakout over here, that could be igniting us towards that direction. At the same time, if we see a breakdown over here, well, that puts us into a test. We've talked about it before. I'm calling it the bull market breakout test. And if that didn't hold, we could be on some trouble. But before we move forward, I want to move forward with you. I want you to first understand that in the past, and this is just the past, and it is nothing more than a roadmap. A roadmap helps you know where you are at a given time. It lets you know whether you are correct, and it lets you know when you're wrong. It's very important stuff. But you could see that, each of these happened before the halving. This is a few months before the halving. This is about a year before the halving. And that would be like more or less right on time if we were able to kick up to 50K over the next couple of months. Why are people only saying in the next couple of months? We're looking at the post debt ceiling liquidity crunch. You've known here that I've been preparing you for what could be actually using those words, liquidity crunch. This is from Lynn Alden's investment letter this week. But if you go back a few weeks ago on the channel, and we talked about liquidity, watch the coming liquidity crunch, and for the same reasons. And she's talking about, let me just go ahead and read over here. Going forward, this sideways liquidity situation is likely to set to continue for the next few months. The Fed is still reducing its balance sheet, right? Quantitative, right? If Jerome Powell comes out next Wednesday and says that quantitative tightening is over, that's a new piece of information that none of us are expecting or aware of, and that would change all of our views on the market. We'll adapt. The market's like a living, breathing thing. It's constantly adapting to new information. The Fed is still reducing its balance sheet, negative for liquidity. Why the debt ceiling issues is likely to result in lower Treasury account balances. The U.S. Treasury is undergoing extraordinary measures, and they're basically counteracting quantitative tightening right now. So it's liquidity sideways. It's being balanced out. Ironically, positive for liquidity until the debt ceiling is resolved, as described in the next section. When the debt ceiling is raised and the Treasury Department begins refilling its Treasury General account, where have we heard this before? With more bond issuances later this year, that would likely be very negative for liquidity. That's why we say that there's only a few more months to watch out for. And then after that, things could get a little dicey. A lot of people are truly worried about it, myself included, because the markets follow liquidity. Assuming the Fed is still reducing their balance sheet, right? We're making the assumption quantitative tightening continues to run. That would be a negative double whammy for liquidity. If I went ahead and I showed you where these two lines come from, you would likely be lost and you wouldn't understand. So I want to make it very clear before we get started. If you enjoy being here, if you value the content, please hit the thumbs up button. If you're watching this on the replay, go ahead and leave a comment about what you enjoyed most during this session. If I showed you, you'd be like, what? Come on. That's just craziness. And indeed, it would be. So I can't just give it to you all at once. Let's go line by line. We're going to focus first over here, and I'm going to show you on the red line. And you should be able to say that by adding this line, I could see why Jordan is going ahead and connecting this, because I see those many touches. It makes a lot of sense. And then you add in another one, and again, you could see that the market is clearly paying attention to that structure, right? So this is on linear, by the way. Linear and log, they do have their own characteristics. We are viewing right now the linear structure of the market. And once again, just by adding these lines, you could see that, wow, okay, now I'm getting it. And I see what he's talking about. If I showed you all at once, you would be like, what is he talking about? And we go ahead and we add them in, and I'm just going to add them in. And I could take the liberty, now that you understand, I could take the liberty in adding these above over here, because some people thought, what kind of TA is this? You don't even know what you're talking about. Well, that's just because, like, I got to break you in slowly. But now I could take the liberty of adding those lines above, and you could see likely why that might be resistance on the way up. And just because if we break out over here, it doesn't mean that it's a clear shot straight up or anything like that whatsoever. And let's also take a look at the other side. Let's take a look at the green line over here, and let me show you how that also is the structure of the market on the linear. So it's very clear. You could see these touches occurring over here. You could see these touches. You could see these touches, and you could buy that. You could make sense, and I could add more, and you could say, oh, yeah, That makes a lot of sense. And I could keep going up or down. You can see that one touch over there. And then, yes, indeed, resistance and resistance again. And we could keep going, add in more. And you could say, oh, it's very clear. I get it, Jordan. I see what you're doing. And it makes a lot of sense now. And thank you, by the way, for just not jumping in and showing me something like this. Because had you just gone ahead and shown me this, like this nonsense over here, or I could just go like this and get rid, you'd be like, what is that craziness? Because it wouldn't have added up and it would have looked like absolutely lunacy. All right. So, what I'm trying to point out to you by looking at the structure of the market is that, you know what? We got resistance here. We got resistance here, 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 and into this area over here. If we break above this resistance, yeah, then 50K, that could be written. And it's not just coming from there. We have also resistance coming from this angle as well. And it just doesn't end there as well. We have further and other resistance. This is on a log scale. And it's amazing that we are looking at also the same structure occurring, but not on linear, on log, or a similar structure, I should say. And you can see over here that we got heavy resistance. There's that April high. And here's the touches that came up, followed by it. And if we came into that area, I would suspect whenever we do, that would likely provide an area of resistance, right? Coming now between 35 and then sloping downwards. And then above it before. And I could also look at this and I could say from the last time, this is the bull market breakout that occurred, right? We never broke above that line until right after the halving. Go back the cycle before, here's the line, the upper line. And I could say, well, we broke above just prior to the halving over here, right? So do you think that, so we could say 6 months, 3 months before, 3 months afterwards, which is in the past when we've broken ahead of this outer line over here. So where does that put us? Well, in the past is different. This is 2023, unprecedented times. We do not know what happens next. We have to have a sound investment plan. Our future literally depends on it. Monetary reset is happening. We got to make sure that we are sharper than ever. Who's your team? I know my team. I got the best team. There's no question about that. But I am glad that you are here. It is good that you are here. I could say in the past cycles, it's been roughly 3 months before, 3 months after where we've broken outside this outer line. Well, that puts us around, I would say like, 38,000 to 33 to 34,000, and price has not kicked back above there. So again, you want to look at things from different vantage points and different angles, including this one. Again, we're on log scale right now. And if I showed you this chart, you might say a couple of things to me. You might be, first of all, if you looked at this chart, you'd be like, what is that nonsense? I see a lot of room over here. And why do you have a line down over here, this bright line, when there's simply no touches to it? Well, let's look at that a little closer. Let's move over to the candles, and now you could see these touches on the lower line and the wicks over there, and you could say, oh, well, that makes sense because if price broke down over here, that likely we could also wick into there, or even worse. And you could say, well, what about this area, this space over here? Why are you drawing this channel like this? It doesn't make sense. And I say to you, well, does it or doesn't it? Let's do the same type of work we just did in the past. And let me go ahead and take a line and start connecting some areas. And you could say, well, there's a touch, resistance, support. Okay, I get it. It makes sense. And is that just one? Did you just get lucky, or does that happen throughout? Let's go ahead and touch it off the top here and the top here, and then support here. And oh, I see what you're saying. Look at that touch. That makes sense. Now I understand where you're coming from. What about over here? Support, resistance, resistance, support. So what about right now where we are? Well, right now you could see that was resistance, that was support, and that is resistance. Is this on a log scale? It's very similar to the resistance we're on over here on the linear. They're lined up really well together. And I could say that if we break above, there's still some resistance right above us, right? We got to clear out this resistance in order to be looking above. And I want you to see when you look at this chart going forward, why that I have that there. All right. Adam, what is a great question. Well, what do you think happens in a recession? Because right now we're looking at in this area ahead, we just talked about liquidity. We talked about reasons why, even though as the Fed next week potentially gets ready to put in their last interest rate hike of the cycle, that's a big event. When they move towards stopping raising rates or pausing the rate hikes, that's a big deal. By the way, that's variable. It is possible that they go from pausing rate hikes to then raising them again. It's data dependent. If inflation begins rearing up, they'll have no choice but to do that. So, look, you cannot and you have to lose the temptation just to have some type of outlook about what you think is going to happen in the markets. Now, you better spend your time forming a thesis and having an idea of what you expect to happen, but it has to be very variable. You can see over here that Lynn said, assuming the Fed. Her thesis is that the Fed will continue quantitative tightening, assuming if they were not to be reducing their balance sheet, that changes things. And you have to understand that the markets are fluid. You need to stop being rigid in what you expect is going to happen and be able to take data and input it. And then you should really spend the majority of your time, I'm talking 95% of your time, developing a plan. Most people that I know that get interested in the markets, they sign up with a broker because the ease of access is like instant. If you want to go ahead and perform brain surgery, how many years of school do you need to go to? And then how long do you need to intern for before you even get into the operating room? You could just sign up with a broker and you could just instantly compete against the best of the best. And most people, what they do is they fund an account and they have dreams about what they're going to achieve, and then they just like click buy and sell, and they have no idea what they're doing. And then they get into a trade and they're watching the market and they're like, oh, I shouldn't have done that. Here's where I should have entered. But rather than working out any type of edge and or plan, they're sitting there kicking off trades and watching price ticks after they get into the trade. That's just an absolute disaster. So the question is, what happens if we enter a recession during this period? We could be entering a recession even as quick. They won't let you know that we were in recession until usually after it's over. And then they'll say in this, that happened in the last recession, 2020. It wasn't until months after they're like, look, that was a recession. And that's how it works. So you have to follow price and you have to follow price action. Now, if we enter a recession over here, I do not think, and assuming that it's not just some like light recession that also involves at the same time some type of balance sheet expansion by the Federal Reserve, assuming balance sheet expansion is not happening and it's not a mild recession, I don't think that Bitcoin's immune, and we will look at future streams what the bearish case for Bitcoin is. We are still far from any type of bearish structural event over here. Actually, we're on the fourth repair. This was the fourth repair. We lost it. We're back above it. We regained it above this area over here, 29,000. So we are super bullish structurally here on Bitcoin. So we don't, if we're coming in and we're testing 25,000 at that point in time, well ahead of time, I will be preparing you for what I think happens to Bitcoin in a recession. It's just not where we are right now. We don't need to be there. So we need to go ahead and continue. What about this chart? What about this chart over here? So we'll keep going. We got some really good questions in there. I'll highlight them and then we'll come back and you learned a lot. Like people who think that they're like first of all, if you're a troll, that just says something about your overall intelligence because you're wasting your time. But yeah, that's true. Like to be able to like take someone who thinks that like that's what happened over here with this. Well, what are you doing? What type of TA is that? Well, if I showed you, you would have no idea. So let me break you in softly, right? Let me break you in softly because this isn't taught in a textbook. This is taught right here on our live streams. Either which way, if you look at this chart, and this is another one of those charts, if I showed you everything at once, you'd be like, what is going on? But this chart over here, you could see this is the December 2017 all-time high. And then it connects that April all-time high. And you could see that connecting these two dots and then connecting those two dots and making a parallel channel off of the low. This is bear market high, bear market low. This is the COVID low, the lockdowns. You can see that price found support onto that trend line. It wicked below, but it found support over here and extend that out. That's a parallel channel. That's where that comes from. I want you to understand because if I showed you everything on this chart at once, you'd be like, dude, what is this? People have done it before. Anyway, look at this over here, by the way. That's the bear market breakout. That trend line that you're looking at on this chart is the same trend line as this right over here. This is this trend line. By the way, to get this trend line, to get this trend line, to get this trend line, this is where the bull market began. And just because the bull market began, and just because in this cycle, once it began, it never ended. And just because in this cycle, when it began, it never ended, it doesn't mean that's going to happen here. Do not for one instant have any type of well, FOMO. I don't know. I don't even really call it hopium. Hopium is how you all have phrased it, and it's a good one. But this line, I just took this line and then I copied and pasted them, and that's how I got this one touch. What are you doing? Yeah, you know now. But anyway, let's keep going over here. Let me explain this, and I wanted to show you what that line was. And let me begin adding in a few more line. This is volume. Okay, why volume? Well, I don't know. You could see a few different things. You could see over here off of the bear market low that volume was higher. You could see uh, winding down, and then higher at the bottom. You could see at this top over here, volume was high. This is on Coinbase. You could see at the all-time high, volume was high. I could see over here again in that period we talked about structurally might be the all-time high. That volume was high. Why in November it was not. So you can make cases for both ways and stop being so rigid. There's nothing to be rigid about. Consult all views and then go ahead and form your own opinion. Like it's not like you're right, I'm wrong, blah 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 blah. It is going ahead and then forming an opinion and then trying to go ahead and continually to build off of it and go further. You can see over here we spiked down on high volume and that didn't last, but you see that volume was rising into that as we were moving down over here during the bear market. Volume was dwindling, not rising. That's interesting. That's a little bit of a difference. But I could see over here off of the low in November that that was a high volume event. So that was signaling that that could be the bottom. No question about that. So that's why volume is on that chart. And then I could add some more things over here. I could add this little line over here. And that line, that remember I told you earlier as we were looking at this chart over here, I said it's a roadmap. It helps you let you know where you're right and where you're wrong. And even if you think as you get towards the end of the cycle, you're going to see a blow off top, if indeed you don't, and you see a technical breakdown, well, that's a sign. That's why you follow a map to know when you are right and to know where you were wrong. That was the first technical breakdown of the cycle that we had. And then that also, by the way, came off of the macro. We talked about a lot of reasons for a April top, but this is a reason for a November top. Here's where the Federal Reserve pivoted their policy. They said, we're going to taper down our quantitative easing purchases, and we're going to be raising rates. That's when we put out the tweet, October 16, 2021, 2022 rate shock. Bitcoin is not immune. And I don't care what you say, there's not one other person out there who consults the macro that saw that come in or at least put it out there at the time. Break it down further, and you could see that 35,000 If you did not de-risk over here, it's not too late. If you lose 35,000, that is a major breakdown. And the second breakdown called out during the bear market. And here was the third, 27,000. Where did he get that line from? Why? Why did he get that line? I'm going to go ahead and show that to you as we go forward. By the way, here you can see this is a line of resistance. And why do I have that there? I'll show you on the next chart. I'll show you on the next chart over here. It is Friday. I hope that you're having fun. I also hope that you are learning something. Please go ahead, hit the like button, share the video with someone. If you're on the Twitter right now, just take a second, copy this link and say, you know what? I think that you should watch this video today and or tomorrow. Let's go ahead further. And that line makes sense. Why is he putting that line over there? Well, that's the June 2019 top. And then you can see this is where we topped out into April, March and April. Let's go ahead and add this line in. And where does he get that line? You remember how I showed you this line over here at the very beginning? And I showed you that was a parallel channel. Well, this is nothing more than a parallel channel drawn off the top of this touch over here. But it does go ahead and it did connect with that spike down of that March low. And it also touched down over here. So now I had two touches. So now I said to myself, and this was done in real time before the breakdown. This is why we said if you lose 27,000, it's a big deal. If you didn't de-risk down at 35,000, this is your last chance. And this is where that line came from. And now because of what I've shown you today during this session, I could take the liberty and going ahead and adding in one touch. Only it's not one touch anymore. It was one touch over here off the low. But this is where the US banking, during the US banking crisis we had about a month ago, this is where it tagged into. It's amazing how those lines work, isn't it? And what is that all about? If I were to show you this chart from the beginning, because you remember that I started this chart off. Let me see if there's anything else out there. Oh, I do. I have volume. If I showed you this volume, I have horizontal support, right? And if I showed you this chart over here, you would be like, come on, what is this nonsense? This is some crazy stuff over here, and I don't understand it. By going ahead, though, and taking you through it line by line, though, starting off with just this, it makes a lot of sense. And that's the difference about it's why I can't post a chart on Twitter, right? You see a lot of people, they post charts on Twitter. People like them. It's really good. If I post this chart out on the Twitter, people will be like, what is that nonsense? And why are you doing that? And that's like, do you know anything about? This is why I like YouTube. It's why I really like this forum to be able to work with you all. Remember this line over here? I showed you this line as well. Let's take a look at that line over here. That's this line over here, right? This is, by the way, a chart that we made coming back before we broke out this trend line. This is the bear market trend line. We're back on log. This is coming off the bottom over here, like some sketches we put together, including these two lines. This line over here, I'm going to come back to at the end because I'm not sure it's relevant. Guess what? If you think that you're going to get it right every time without making mistakes, the markets are not for you. You better be really, 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 really good at being fine with being wrong. Actually, everyone in CTM knows that we are wrong almost 60% of the time. And we are really, really, really good with that. So let's go ahead and continue this forward. And I want you to ignore this one line that I'm highlighting for a second. And I want you to focus on this line that you could see coming off of this chart right over here. I want you, by the way, do you see how that we have the touches here and that breaking above it, we've now tested that line twice, right? If I zoom in, you can see that we've tested that line twice. That's where we held. I wish I had that line in the chart last week as we were coming into this area over here, because I'm looking at upward sloping lines, right? That's a downward sloping line where slightly, it makes a lot of sense. We're on log though. That's linear. You're just looking at here. This is linear and this is log. And by the way, I consult them both at all times. I consult them both at all times because again, I just don't get stuck in one view. I go ahead and I use as much information as possible. And then that critical thinking. Would you ever consider doing a roast with Michael Saylor? I'm not sure what that is, what a roast is, or doing a roast or anything like that. Um, so let's go forward and let me add a couple of more, and just to make sure that we're on the right path. And I guess I'm cloning this line here now. So don't ignore this line, focus on that line. And we're going to go ahead and see what else and where else that is showing in the market. And you could see very clearly that that is being resistance, support, resistant. Wow, this is insane. It's like the Matrix, right? And then I could see throughout that that is indeed the structure of the market. It's very clear at this point in time. You can now see it. I don't need to go ahead and show you each touch and why it's happening, because you're able to see it. I want to come a little bit further. And now I could take the liberty of bringing them all the way up, even one touches, and looking at where that resistance would be. Is it important to know off the top over here where that top resistance would be? And it is important to know where the top resistance here. Okay, I'm looking at $50,000, and I'm looking at $50,000 because I know that in the past we have tagged this region 2 different times. So it doesn't mean that we have to do it again. It doesn't mean that we can miss by now or get closer, and it doesn't mean that we can't peek through it. But if we do peek through it, I guarantee that a lot of people will be telling you with conviction and certainty that we're making new all-time highs, because I told you over here we were going to make new all-time highs before the halving. Okay, but you also told me throughout 2022 that this was just the correction and we were going to go, and you told me that the low was in. And you told me the low was in, and you told me the low was in, and then you told me they were going lower, and then that was the low. So what do you know? Right? What do you know? I don't know, but I want to know. And I want to look at this line over here. This is coming in at where? This is coming in. This is slightly sloping down. This is coming in around $57,000. And then this line over here is also coming in a little bit lower. So if we broke 50,000 and the FOMO started to really get crazy, I'd want to be focusing and aware of these levels over here at this particular time, so that I am aware of the resistance and I could see how price reacts in and around that. And this line over here, I don't know whether or not that this was correct, this one, or I should say that one is correct, this one here. And I could just briefly move it with you, and it's hard to say that it's not. And I'll do what I just did one more time. You ready? So I have this line over here. I'm going to move it up now, and resistance, resistance, support. And then that's one, maybe. What about this one? Resistance, resistance, support. So maybe, I don't know, to be honest. And this one over here, I don't know. I just don't know. And guess what? I am perfectly comfortable not knowing, for real. So I don't know. But I'm going to leave it on there because I don't know. And it may be a value. So I'm going to leave it there for further. Have you seen? I'd like to check in what's going on between the race, Bitcoin and Ethereum off of their lows. We're looking at the low of Ethereum occurring back here in June. And since then until today, it's up 91%. We're looking at the low of Bitcoin coming in November. And since then, it's up 85%. So post Shanghai update, because around this area over here, Bitcoin was outperforming Ethereum off its low. We're seeing now Ethereum here after first really racing ahead, right? At this point here, still almost neck and neck, but outperforming Bitcoin. And that's an indication to me that, well, maybe there's some more umph left in this rally. We want to make sure that we follow the technicals and stay on the right side. Looking here at the linear chart, we saw yesterday that we made a nice repair again, closing above this line of resistance that was lost. That sent us back structurally very bullish. And since then, you could see that, well, we've come back into that magic line and are testing it. And as long as we close above it, the bullish structure remains intact. If we close below this line, things are starting to once again get a little bit weaker. that would take us neutral. This is the hardest part for people to do. People like when you break a line and price goes straight up. People like when you break a line below and go straight down because that's easy. It's not always like that. Here's a perfect example. Here's a line that you're not familiar with. I'm going to go ahead and show you what it is. It's called the previous cycle ceiling, and it's coming here at 17,250. It was the most important line during the bear market, and we were the only ones who talked about it. Why is it here? What does it mean? Where does it come from? Just come back to the top of 2000, the last cycle, and you could see this is where price formed resistance. Price briefly traded above it and hit 19,600. And then on below, this is where price formed resistance. That's the ceiling. You could see when the bull market began. Here's where the bull market began. We looked at that trend line earlier. Price broke out and ran into and above the previous cycle ceiling. And then you could see that it tested it as support. Look at that area. That held all the way, and including when you saw the collapse of Celsius and Three Arrows. That previous cycle ceiling was tested again. It only broke upon the collapse of FTX. And after it broke, you could see price closed above it. Let me come down to the daily time frame. Daily time frame is showing you that we closed above it over here, and that's bullish. It's a major event. You just reclaimed the previous cycle ceiling. You have to get long. And then you could see that it closed below it. And we do better than that. It just wasn't closed below it. We had a trend line like this. And once we closed below it, that was getting below that last swing low. That's the exit. It was talked about before the entry. And now you have to get short. So you went from long to short. And now you are short and you have short expectations. And then you close back above it over here. Well, you got to get long again. You got to flip flop and stay on the right side because you never know. And you just want to be on the right side. We're towards a similar situation. You just went from making a bullish repair. By the way, the fourth one off of the low. I talked about the bullish break, the bearish breakdowns on the way down, right? All called out in advance. And I said that I would do it on the way up, and we have done it on the way up. It includes the first one, the previous cycle ceiling. It includes the trend line of the bear market breakout. And then it included over here the $25,000 resistance. Look at the Luna low. Look at the retrace off the Luna low. And then we found that same resist. That was the third repair. And then the fourth one we just looked at that's occurring above. But then we lost it. We'll get neutral, breakdown, get short. This is discretionary. Get back neutral, short neutral, buy. And if you like, people get exhausted. If you want to do extraordinary things, you have to talk yourself into understanding that you need to perform at an elite level. That requires dedication, that requires constant effort. You can't be soft. There's no way that you're going to compete in the markets if you're soft. You have to make sure that you are mentally strong. You have to go ahead and spend all of your time developing an edge, developing a plan. If you don't have a plan, and the plan is not, I'm going to take 3 trades a day, and if I lose 3 of them, I'm going to stop trading for the day. That's nonsense. That's not a plan. That's not even trading 101. You need to develop a plan that has been back tested, because even though back testing is not indicative of future performance, at least you have awareness and expectations to know when indeed things are working well and they are not. You could get exhausted if this doesn't go over here and make a new high, taking out the previous local high, and instead goes back neutral and then back positive and then neutral, positive, positive. And if you're afraid of getting chopped around, maybe you're looking at, moving instead of just going neutral. But there's a big difference. Let me show you. There's a big difference between taking a stop here, roughly around 28,700, and taking a stop down, if that looked a 6.5% difference. And that's a big difference. You're likely better off having a lower win percentage, cutting your losers short, and then taking, of course, some small wins and and then having trades, a small few of your trades that you're able to hold and push. This was one of them. This was a loss, right? Small loss, go short, get out, and then a big gain. You want your bigger gains to outperform your smaller losses. It's the only way. Let's move over. Let's talk a little bit about the NASDAQ. It's at a major pivotal point over here. Looking at this chart, I want you to see that, well, this is the bear market. And I can notice a couple of things. Steven, we'll get into what we do and how we do it in just a moment. And by the way, I mean, even buy side only, right? This is looking at, some people think that dollar cost averaging is a really good way to go, right? And I have to tell you, to be honest, I would tell my mom to do it. You know, my mom won't buy Bitcoin. She's, she's older. She won't do it. I tell her you should, I would tell her you should, and as well as my cousin and my uncle and my neighbor. I would probably tell, well, my neighbor could actually, I could be a little bit more intricate with, right? Because I see them, you see them almost often and whatnot. But this is showing you, if you began at the all-time high, dollar cost averaging Bitcoin, let's say on a daily basis. And by the time Bitcoin started kicking back up and came above that $25,000 resistance level, you can see it here. This is the Luna low, the 3 arrows Celsius rally. And then you could see this is where we rallied back into. And that's what your average cost would be if the whole bear market you were dollar cost averaging Bitcoin, and now you're up, and you're up like, I don't know, 17%, and you're like, I'm doing good. And you are. And if Bitcoin goes on to do some Bitcoin things in Bitcoin time, then you're going to be looking really well. If we see in 2024, roughly 6 months after the halving, Bitcoin making new all-time highs, and I don't know that that's going to happen or not, but if that's what's happening, you're going to look really good and it's going to feel really good. But Bitcoin could also hit that recession, and that recession might not be mild, and it also might lead to a credit event, and Bitcoin might, it might be tough, especially if your plan is, I'm just going to buy and hold and dollar cost average into Bitcoin. I mean, things could get tough. If you were using like a buy strategy over here, and you could say, well, during that same period, I'm only up 27%. You mean I've only had an 8% drawdown? No, you didn't have to pay any taxes during that whole year, 2022. Actually, you only had one trade and it's a 4% loss. But having the purchasing power of the top of your account less 4% is significantly greater than going ahead. And by the way, you dollar cost average the whole time. But instead of dollar cost averaging the Bitcoin, you're dollar cost averaging on that daily or monthly or weekly basis into your cash account. And then when it's time to buy, you're buying full purchasing power, which you preserved. Because the difference between having full purchasing power and a 27% return compared to bringing down and going through a 75% drawdown, where you need what? A 350, 400% return just to get back to break even, is the difference between actually over the course of the next decade doing extraordinary things, thriving during this monetary reset, or putting yourself in a position where you're forced to hope that Bitcoin continues to do Bitcoin things on Bitcoin times. So it's a major difference. But how do you backtest that? You go back and you go over as much time as you want. That's only since 2001, the top, right? Most people are familiar with 2020 because in 2020, Bitcoin was at $29,000, right? At the end of 2020, right? December 31st, you're looking at Bitcoin $29,000. I think that's correct. I don't know exactly, but I'm gonna say it is. And you could say, well, I haven't lost anything in 3 years. I'm right where I was. Well, if you were just buying at the right time, now you have to pay taxes on this, but I'd much rather go through, and I pay a lot of taxes, and I'm happy to pay taxes, but going through a 9% drawdown and having massive profit compared to just break even and not paying taxes. Well, that sounds silly, doesn't it? I don't want to pay taxes. Okay. Don't pay taxes. Have fun holding. I hope they don't make you pay taxes on those unrealized profits at any time. But back testing is essential to go forward. Jump back over. Let's look at the NASDAQ, and we're looking at the bear market. And during that bear market, we saw each rally was sold. Each rally was sold. Each rally was, we didn't make a new low. This rally, nope. Now we're making higher highs. Now we're making higher highs. Let's take a look at that from a CTM perspective. We'll add in some trend lines and we're going to zoom in. And I know that gets quite muddled from where we are. We are breaking out above, Michelle, big shout out, above and ready to potentially close through this, what you could see, these two green lines. That is, as Michelle pointed out early in the week, a bull flag. We were tracking before then and up until then, right? This over here. And this was a trend line break over here, a sell event, right? You can see that sell event occurring. And then we talked about having this trend line over here and with the awareness of knowing that was that bull flag support. And then you can see that $13,000 level just under it, that horizontal support. That's very important. We talked about this would be the place off of that support position long, majority in the top over here. But now we're looking at potentially extending out further. Earnings all week, with the exception of Amazon, AWS, which is a big deal though, because a lot of companies use AWS for their hosting. But if you looked at Alphabet, if you looked at Microsoft, if you looked at Meta, really strong and good earnings. And it looks like that big tech is showing that once again now they're able to continue in this high inflationary environment, keep meeting expectations and or beating them. And coming into the FOMC, it looks like that we are, if we close above here today, that is coming off of, first, we had the first repair off that bear market trend line, bear market breakout. Second major repair was above the purple line. And this is a continuation, right? This is a bear flag. And by the way, that took like your long, short, back on the right side. Over here, for some people getting above, this is a good place. There's about 3% into the next area of resistance. 3% into this area of resistance. Could we even take it out? For sure, all those things are quite on the table. The structure remains and continues to be very bullish. We've seen over the last few months as liquidity coming from other places. We saw China adding liquidity. We saw the liquidity from the US being nullified, that sideways liquidity, and risk is doing really well because inflation has been rolling over during this period as well. And it looks like that could continue. We put a clock. A clock is like, for the next 2 or 3 months, if Bitcoin is going to tag 50K, it looks like that is the time it's going to need to do it, because beyond then, the liquidity clock is running down. However, next week, we also have Jay Powell. And if Jay Powell comes out and he says, well, we're seeing good signs of inflationary pressures coming off. We're not out of the woods yet. We want to stay in front of it. And while we're seeing some potential hiccups in the job market, it's still historically quite strong. And we want to make sure that we stay in front of inflation. And then all of a sudden, the June meeting is a live meeting. Well, we might not even make it up there. Look, this is the type of world we live in. It takes a lot of work, and that's what we do here together. We put the work in, but thank God. And I just want to point out one other thing to you before we go forward, and that's the dollar. You can see the dollar is slightly positive today. I see yields off though. Yields to me is a bigger, more important in this inflationary regime signal over here. Bitcoin yields coming off. That's good for Bitcoin. Bitcoin's red today. Ethereum is red today. But we looked at Bitcoin structurally, and it looks quite good. So, as long as we're above and close above this area, It doesn't get bad until we close below. I think it's 27,300 now. We marked it out. We'll look at that next week if we lose this area and we need to. But what I'm getting at here is the dollar and why is the dollar green today? Stanley Druckenmiller told us that he is very bearish on. Look at this. This is pretty cool. CTM. Where could I find it? Hold on, let me try one other thing with y'all. I don't have it. I have way too many charts. Maybe it's this one. Let me try them all before we move forward. I was hoping we have it. So, all right, you just have to take my word for it. But if you watch these streams every day, we had in this area a yellow line, right? And that yellow line was saying, even though some people might think that we're having a buy impulse, we're giving it room and we're waiting. Look how that was tagged today. We came into that area and we're saying above here is when we get long. And then I also did one other thing. I added this. So, right? Like that. Let me get it exact. I'll find the chart. I have the chart. I could probably pull it up right now, but we'll just keep going because we got some momentum. And I drew that line in. We get above there and the yellow line. That's our buy impulse. Look at that. Because I saw people today thinking that we were undergoing a buy impulse. It's a good thing we gave it a little bit of room. What caused that spike in the dollar? Likely it was the Bank of Japan. We talked about this being the most important event of the week and how likely it would affect the dollar. We saw that the Bank of Japan says that, nope, we are not going to get our house in order at this point, and we're going to continue our current policy, maybe even for the next 1.5 years. And you're seeing the yen being sold, being that the Japanese yen, when you look at the DXY, the US dollar index, is the second largest component. Largest component, last I checked, was the euro at 57%. Japanese yen was something like 20%. I'm not sure what it is. And then we see that stealth easing in Japan because they're going to continue their easy monetary policy. Well, that makes inflation a global macro risk. Other people have different thoughts. They think that, well, there's no way that they're going to be able to continue that. And they're going to have to flip and they're actually going to go hawkish. They're going to have to wind down their easing. And that's going to cause even further tightening. As of right now, the only one easing is the Bank of Japan. China was a one-off injection. This is all liquidity stuff. We need to keep track of it. Thank God in these unprecedented times that we have CTM 2.0 to keep us on the right side. Bitcoin over there, and just in conjunction as we regain that $29,000 level, it also entered long, currently holding a long position. It's currently minus 1% out of profit. And for the course of 2023, has been absolutely stellar. How many people do you know were buying down over here below 17,000, right? How many people navigated the banking crisis as well? CTM 2.0, why we just took a trade, any individual trade is not important. We know when we look at, and we could say that right now, we're looking at, well, that's kind of right near our percent profitable. This is for 2023, right? If I look and I go back and I say, well, what about since 2022? How was that bear market, right? 40% profitable. Oh, okay. Well, what happens if we add in, 2021? Nothing special about the last 2 years, 2021 to today. Actually, a lot of people had a very difficult time navigating it, getting absolutely wrecked. Oh, that's pretty good. Oh, look, percent profitable remains the same. What happens if we go back a little bit further? 2020, that was a good time. Like, yeah, that was a good time. You notice the percent profitable is the same. That is what our expectations are. So going into the next trade, I don't know. I know that we've been for the year at about 40%. What about from the last bear market? Forget adding in a bull market. What about, oh, that's 2 bear markets. Look at the percent profitable. All right. Well, what about a bull market? Does it perform during a bull market as well? I would say so. Look at the percent profitable. It's the same. Look at that drawdown. So that's a plan. that's a plan that you want to follow. And I could give you the plan, but it doesn't mean that you're going to follow it, because likely what you would do if you had access to this plan is you would spend the next 3 to 6 months second guessing every single trade it took. And you would say, well, we just took a nice trade over here and we're 8% in profit, but CPI is coming out today. So I'm going to take profit ahead of the CPI at 8%. Oh, you cut your winners short. We kind of, we go about it a different way. We look to keep our losers short and push our winners, because you never know what's going to happen. And look at the difference. Look at the average trade. What's the average trade? This is on Bitcoin. Bitcoin is Bitcoin. And like I say, the average winning trade is 10%. And the average losing trade is 2%. That's a 5-to-1 risk reward ratio. That's pretty good. Do you get that if you cut your winning trade short? No, you don't. 40% profitable. Average trade, 3% gain. All right. That's pretty cool. What's the largest winning trade? 42%. Do you get to 42% gain taking a 8% gain? Never. Largest losing trade, 3.2%, includes commissions. I mean, Ethereum is substantially greater. It's out of the market, it's on the sidelines, and it's waiting. A lot of people getting wrecked, both sides over here. They don't know what's going on, what to do. Yeah, but knowing when to be in the market and when to be out of the market is priceless. Out of the market, waiting what's going on. You just saw kind of what Bitcoin has done during those time frames. Ethereum is obviously much different. In 2023, you would say that it's lagging, right? We saw 25%. You could say it's lagging. Bitcoin is up 30%. It was lagging during that Shanghai upgrade. Prior to it, we were looking at volatility being suppressed. You go back and we again look at 2022, that bear market destroyed a lot of people. Obviously, the gains are much greater than on Bitcoin because it's more volatile. It's more about, this was last summer, 52% to the upside. Imagine being able to trade both sides without bias, and you don't need to trade both sides. If you're just trading the long side, that's more than enough. This is the last 15, 16 months. More than enough to get it done. If you add in a bull market, it gets a little crazy. 2021, nothing crazy about the last 2 years, but those returns are kind of crazy. But since 2020, yeah, it gets a little ridiculous, right? This is absolutely stunning. What about from the top of the last bull market? Absolutely ridiculous. And if I add in a bull market, you're going to be like, what? Yeah, that's 4 million%. That's a 20% drawdown. No, past performance is not indicative whatsoever of future results, but a plan in place that continues to perform in real time going forward. It was March 2020 that we first introduced CTM 220. We're over a year anniversary now. Having a plan, I'm trading 3 times a day, and if I take 3 losses, I'm stopping for the day. That's not a plan. That's not a plan. And if Bitcoin continues to do Bitcoin things on a Bitcoin timeline, then yeah, dollar cost averaging throughout the bear market will be fine. You'll do good, especially if over the next decade you're able to do the same and Bitcoin wins. But as much as I am a Bitcoiner, and I am a Bitcoiner because I believe it is fair and just, and also because I believe one of the greatest evils in the world are the central banksters and the central banking system, I also happen to know and believe that there is no given. And I can't just have hope as a strategy. I have to make sure I do everything in my power to put the most probabilities in my favor, that regardless of what happens, and by the way, if you are trading only the buy side, and even on the daily time frame, by the way, on the daily time frame, Bitcoin over here is still waiting for a signal, right? Ethereum, which was set to exit a trade on this big spike up over here, it was 6 hours during our live session until the close. It wound up holding on to that trade, still continuing to hold on to that trade. If you're trading Bitcoin on the daily time frame, which requires just one trade a day, right? and something happens to Bitcoin, what about over the last, 3 years? Well, if something happens and Bitcoin doesn't do Bitcoin things, knowing when to be out of the market is absolutely priceless. That, our friends, is the session for today. Let's check in with stocks really quick. We see that TQQQ is holding on to that buy that it took yesterday. It is currently 2.8% into profit for the year 2023. It's hanging in there. It's positive and it's profitable, which is, a lot more than we could say for now. That's a 7.8% return for 2023 on the TQQQ, 3 times leverage QQQ ETF. However, on the short side, we took a loss over here. It's not the same. So you got to add them both together. And you have over here a 3.5% loss. So you're looking at up 4.5% on the year, holding an open position, 2.8 thus far into profit. FNGU is exited position at its loss. So let me just jump over and show that it took a loss 1.2% for the year 2023. It is outperforming everything that we do, up 83%. Slight gain on the sell side in the same year, 2023, right? Even 83% on the year. And Tesla, same thing, remains on the sidelines now. And for the year is up, I think it's 30% on the year. Let's go ahead. This was just 2023 January when CTM was able to make the move into the stock market. The right time too, by the way. When I say the right time, a lot of people are very uncomfortable using a lot of crypto brokers. Look, there's one thing being able to have a strategy that is able to profit in the markets regardless of what happens. And there's another of not being able to trust an exchange. Now, some people are using the CME. A lot more people are moving to the CME. We have solutions on the CME. They're extremely profitable, as profitable as our other crypto brokers trading 24 hours a day, 7 days a week. However, it requires holding a trade over the weekend when the market's closed. As well does this as well. All stocks and overnight. This is only traded during regular trading hours, which means that you're going to have gap downs. Even on the TQQQ, you'll notice that the stop loss is 2.8%. And then if I look at my largest stop loss, let me just go back to enough time where you can understand and see, because you have to know and understand all of your risks. There are absolutely no guarantees. And even though my stop loss is 2.1%, I can see that my largest stop loss over here is going to be, why did it not work out? Let me try FNGU. I'm trying to make this look bad. I sincerely am. FNGU, going back to 2020, 1.2% is the stop loss. However, I'm going to see my largest losing trade is it's average. Large. Here we go. That's what 6.8%, because you can't exit a trade if the market is not active. That includes weekends. That includes when doing only regular trading hours overnight. So know and understand your risks. There is no guaranteed money. When I say that could profit in all conditions, CTM 2.0 could fail. It continues to outperform, but I imagine something could happen, right? I imagine something could happen, and only you could look at what your expectations are. That's all. Everyone, have a great day. Have a beautiful day. I hope that you enjoy your weekend. Get some rest. Monday, we're going to get right back into it. S&P 500. Let me go ahead, Nader, and before we jump over here, thanks for making 100 likes. By the way, I thought it was a super valuable session. Anyone here that was able to stay through and hit that like button, really grateful, and grateful for you being here. S&P 500, we saw, and just jump down to the 8-hour time frame. It's a smaller time frame. We going out of the week or before this week, this is what we were looking at. we were looking at a sell impulse triggering. And then we, during the week, I think it was Wednesday, right? During Wednesday session, we added in this clone trend line. Now you all know from this session today what those clone trend lines are and why we use them, even off of just this one touch over here. And price didn't close below there. You could see that it held. This is like essential watching, this session that we did today, because it helps you understand when we start doing things, when you're not going to be like, what is this guy doing? Where does he come up with all of this stuff over here? And why we, when I start adding in one touch trend lines, it'll make a lot more sense to you going forward. But this is what we were looking at. And then we added in this trend line over here, right? And this is where that sell is then nullified. So that's like a break even trade. You just looked at the importance of why you want, even with a 60% lose rate, 40% win rate, why you want most of your trades to be small wins or loses, right? Here's a small loss. You can see since the breakout, retest, and now resuming up, coming into this area of resistance on the weekend over here. NASDAQ still on its highs of the session. And that's exactly where we are coming into the weekend. I don't know. I just remember when I think I forget how old I was. I think I was maybe 20 years old and on an overnight plane to the Netherlands. And as you get on the plane, there was a Barron's magazine. And I just wanted something to read. And I picked up the magazine. And as I'm going, or paper, and as I'm going through it, like it was all Greek. I did not understand any of it. And I just wanted to understand more. And I just wanted to understand more. And then this is like during also like the .com bubble. And I would see things like on the cover of Newsweek and it'd be like Netscape. I'd be like, yeah, you should buy Netscape now. And then like it was bought out by Yahoo. And oh yeah, see how it was really just at first the enormous potential. And soon afterwards, it became the incredible challenge that it offered. I believe that the capital markets actually offered one of the greatest challenges that was out there. And that was attractive to me to really go ahead. And I like to be creative, I like challenges. And then I also like the reward, the potential reward that was involved. I wanted a lifestyle where I could kind of have freedom to travel. I have since obviously traveled the world, trade off every continent. Today it's a little different. We got 6 kids, but I'm able to go ahead and anyway, that I don't know, but it's a long process. It's not, and you don't become an overnight success. It is putting in a massive amount of work. I mean, this all started when me and one of my closest friends used to, like, on a Saturday, get together with coffee and go over charts and teach ourselves. The resources that are available today were not available back then. YouTube did not even exist. It was a lot different. And I'm grateful for all of it. But it's much better today being in a community of like-minded people collaborating together than it is out there alone. There's no question about that. Either way, above all, it's an amazing, thank you so much, Jeff. I appreciate it. It's an amazing passion above all. And still, that passion continues. I'm reading some of your comments right now. And by the way, again, I think I mentioned it earlier. Even having such a well defined plan, emotions will still come into play, especially those that do not have the experience yet. I think it takes people like 3 to 5 minutes to learn that they do not know better and they would have been better off. I highly recommend like discretionary trading alongside CTM 2.0, just so you could see, right? Let's look back over here. 2023, not off to the best start. Since 2022, Cardano in the 8 hour, it was 190% just in 2022. which most people consider to be a very bad year. Start adding in some Cardano things happening. The returns obviously outperform Bitcoin, but there's also greater risk involved. The drawdown on Bitcoin is, I mean, it's 1800 with a 70% drawdown over the same time period. Allocation. How do you form an allocation by which instruments you're trading? What is the best allocation? How do you know what's going to outperform at what time? These are all questions that together we have thought through, we have worked out, we have gone over during live streams. Go to the Nuggets channel, look at the Nuggets. It is a wealth of information. Everyone, have a beautiful day. Thanks for being here today. Yeah, you could lose money. There's no question you could lose money. It's the markets. Nothing's guaranteed. Of course, you could lose money. Now, likely you would lose money by through execution, through not following through as you're supposed to, getting an exit signal and holding on to your trade because you think that it's going to come back. They're like so. Imagine like do you know how incredibly difficult it is to come up with a strategy that has a winning edge? And like I said, this all includes commissions. Like you seen or I'm able to see, there are some people out on there on the internet will show you something. This is including zero point zero 0.01 commission. There are people out there who will show you something, and then if you add commissions to that, it's not profitable any longer. If it's using a trailing stop loss that TradingView is not able to incorporate until after the signal is closed and therefore it's meaningless, the results are not real. We're able to emulate these results, and we've been doing it now for over a year. It's not guaranteed whatsoever, but likely if you get a signal that says it's time to exit the trade, or like you have a pending alert coming in 1 hour. So I'm going to go ahead and I'm looking for where there's a preemptive signal. Um, there's not one at this particular moment, but if there were, and you're like, okay, I'm going to enter the market ahead of time because I'm going to front run the signal. And then an hour later, there's no signal. Like it's not following the system. Yeah, that's a great way to end it. Everyone, have an incredible day. And I'll see you all. I'll see you all on Monday. God bless you. Enjoy, everyone. I'll see you soon. Thanks for being here. And what about the new mic? Is there any sound difference in the new mic? Please let me know. I'm interested in that. If someone made it on the replay, since we're getting off here on the live, if you could let me know if you noticed any difference in the sound quality. We're looking to be able to perform to the highest level we can in all aspects. There's no question about that. And that's why it's so important to get out there and have a good one. Did not notice. That's a good thing too. Thanks, Michelle. Everyone, I'll see you all later.